Hello guys, and welcome to this lesson which involves the role of a broker. Now what we're covering in this video are questions like what is a broker and the different types of brokers. What is a broker? The broker holds your funds that you intend to use to trade the market. In turn, the broker provides you with access to the markets. Even the little guy can open a trading account. Brokers supply the charting software traders can use to open and close orders. And most brokers also offer market research and commentary. Now, there are different types of brokers, and we could cover shortly what we call a dealing desk broker and also non-dealing desk brokers. These involve straight-through processing, or STPs, electronic communications networks, or ECNs, and direct market access, or DMA. Now, a dealing desk broker is also known as a market maker. They usually offer customers fixed spreads. However, they will take the opposite side of your trade. So if you buy or go long, the dealing desk broker will take the opposite side of that. In other words, they will take a trade that goes short against you. These are generally considered to have a conflict of interest with account holders. Non-dealing desk brokers are considered the more desirable type of broker amongst most traders. This type of broker will route your trade orders directly into the interbank market through liquidity providers. Liquidity providers are entities like banks, hedge funds, market makers, and other brokers. Now, a non-dealing desk broker has a few different kinds or types, and we've covered these shortly, but they're called straight-through processing. Just want you to be aware of them for now. STPs, electronic communications networks, ECNs, and direct market access or DMA. The straight-through processing or STP type broker is a non-dealing desk broker. This type of broker routes orders directly through to the liquidity providers who have access to the interbank market. If there is no immediate fill from the liquidity providers, you might experience a requote and a small delay getting into the market. Electronic Communications Network or ECN brokers, these are different from STP brokers in that this broker does not get you into the interbank market the same way the STP broker does. The broker matches your orders with other participants like banks, market makers, hedge funds, and other individual traders that are taking the opposite position that you are. Commissions are usually charged on trade orders. And electronic communication network or ECN brokers are also the most favorable kind of broker. Similar to an STP broker, but the difference is that they allow the orders of the clients to interact with the orders of other participants in the ECN or the network. They will connect you to their liquidity providers instantly. You can rely on getting good rates with no slippage or requotes. The direct market access or DMA brokers offer only 5-digit quotes and variable spreads. The spread comes directly from their liquidity providers with a small increase as the brokers charge. No commissions are charged. The only price you pay is the spread. I'm not going to deal with different types of brokers as in different brokerages and which is the best to trade. The advice is to have a look in your country specifically, depending on your laws and so on, to find a broker, and you could basically ask them what type of broker. Are they direct market access brokers or any of the others? Thank you for this short summary, and I'll see you again in the next video.